All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Friday, June 4th. So as always, on Fridays, what we do is not only a day recap, but we'll also go over the week's performance. We'll talk about a couple of the themes, and, we'll talk about some of the areas that are breaking out. And, of course, some of the under the radar moves as well that I see taking place too, which are going to be in the spreadsheet. First things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. The video is for education purposes only. If the video is a bit blurry, YouTube takes a while to render the high def version of the video. Just hold on, or you can follow along. I think on my Twitter page, I usually put this out. Although today's Friday, so I'm not sure if I'm going to put this information out, but it will be put in the trading room so that you can follow along in case the video is blurry. So let's talk about major theme of the day was the kind of data point that everybody seems to be waiting for. It's kind of funny with this kind of stuff when we do have a data point. I think they're important to watch, but at the end of the day, the market's going to do what it's going to do. Because I think the report that we had today, a weaker than expected report. So you could argue, if you like, that the weaker expected job data that comes in, perhaps doesn't give the Fed enough ammunition to do the tapering and the interest rate increasing, right? They can still make the argument that they're waiting for stronger growth from that part of the market. But I don't know. I mean, the jobs market is kind of an interesting thing that's going on. You look at this number, this underemployment rate, which is 10.2%, and, with throwing my little opinion in here, it seems like from what we're hearing and listening to different commentators is that some people just don't want to go back to work for whatever reason, which I'm not going to get into in this video. But does that mean that we have a weak jobs data because people don't want to go back to work because maybe they're still getting stimulus and so on and so forth, and they saved? I don't know. I don't think that you could really draw the conclusion that we have a weak job market. It just may mean that people don't want to work. So, and maybe they're trading meme stocks at home. So eventually, I think that's kind of my opinion is, and I'm not an economist or anything like that, but I do like to talk about the stuff. I think that's a temporary thing. I think if you take away the stimulus, you're going to find that people go back to work, right? Or if, jobs increase their wages a little bit, that may also have an effect. But, we go back to, if you go back to some of the data that we're getting, that we've been getting, you look at the ISM data, it's been strong. A lot of the other data points that have been coming out, right? I tend to look at this type of data because it kind of just tells you whether the economy is expansionary or if it's in decline. And look at the number. It was 61.2. That's a really high number. What was the services one? ISM services came out to be a 64. Right? Again, anything above 50 is expansionary. That is super. That is super bullish, right? This is the data. If you want to look at this over time, this is going back to 2011. So this is the highest the ISM services has been. So you kind of have to look at some of these things all together and kind of have that opinion. Now, so that's just one data point. If you want to look at the graph of the ISM, that was the services. The one that I went over first was the manufacturing one, right? And if we look at the ISM manufacturing too, you got a similar thing going on. I mean, this is as high as it's been. I'm not going to go back further than 2011, but it seems like we've got a very strong market. Now, we also know that there's more and more people getting vaccinated too. So at some point, these things inevitably, the tapering and so forth, when does it start? Is it how much is priced into the market? Those are some of the things that you can kind of make some some guesses about, some intuitive guesses, I guess. But on the bright side, so that's kind of just the overall picture, I think, and the economics. So why is that important? Why do I go into that? Well, because the Fed is a big driver of what's going on, right? They've been inserting liquidity, since this, since going back obviously last year, and we don't know for certain, right? And I think that's why everybody's speculating is what happens once they start taking that punch bowl of liquidity away. And when does that happen? Is it another 6 months? Is it 9 months? Is it further than that? We don't know. And I would think with the data as strong as it is, it would be sooner than later. But, I'm not in control of that. The Fed's in control of that. And, we've certainly heard many Fed members discuss this. Some of them have been non-voting members talking about like tapering should be talked about now, but Powell's the one who's in control. So bottom line is that next Fed meeting is June 16th, right? Today's date is the 4th. So the Fed also enters into a quiet period, so we don't have to really listen to them go back and forth about this tapering subject. Maybe this market can kind of, that was my view going into this week, was that, beginning of the month, usually the equity performance is a little bit better in the first half of the month versus the second half. And we got a little bit sidetracked this week, right? All the speculative names and the short squeezes kind of, I thought was a major distraction for the week. I thought that, unless you're trading all of that stuff and you're really good day trading it, if you've been listening to my videos, it's not something that I do a lot of participation in. So on one side, wasn't able to really make any money on those things going up because I just didn't participate other than a couple day trades in there. Like the go-go that I mentioned yesterday. And at the same time, a lot of these things have given back their gains just as fast as they went up. We talked about that in yesterday's video. You could see this stuff coming down very quickly. So I don't want to spend any more time on that. I want to talk about some of the more positive developments in the market. But let's start with that, right? So we mentioned the jobs report, and that was a catalyst for the day. If we look at the performance for the day, you had S&P up close to 1%, which was finally like a decent move, rather than what we've been seeing is like these 10 to 20 basis points move. Now we finally got almost 100 basis points, right? Almost 1%. Nasdaq had a particularly strong day. That was up 1.7% and rallied throughout the session. Small caps were not a major factor for the day. They've been quiet the last couple days, after they've performed very well over the last week and a half. And then here was another, I thought, a major story of the day. On the back of that weaker than expected jobs report, the bonds really rallied. So when you look at the bonds, and we'll start with here, because I do think the bonds, I say just almost every video, probably a couple times in these videos during the week, but the bond market is very important. Right, it's a bigger market than the equity market is, believe it or not. I know most of the viewers who are watching this video, as well as most of the Tribeca Trade Group members, are mostly equity traders. But you have to realize, even though if you're not doing a lot of trading in the bond market, that the bond market is so-called more of the smart money. And it's important to kind of take note of what's happening here. So if you look at the long bond ETF, right, it kind of, went along support a couple times here and it held. So the more distance we get away from, again, this is my opinion, but the more distance that we get away from a breakdown, meaning, when bonds go down, yields go higher, that just gives a little bit more bumper room to the market, right? It's one of those risks, right? We know that there's a few different risks going on in the market at all times, right? There's the wall of worry, right? Things that you have to worry about outside of like the fundamental things that are going on in a company, right? Some of those exterior things are what bonds are doing and yields are doing, what the Fed is doing, also a little bit of currencies too. There's probably a couple other things too, but those are the main things, right, that I tend to really look at as some of those exterior risks of the market. So again, my view is that the more that bonds rally a little bit and get away from a breakdown, it just adds a little bit of bumper room, right, to the or room away from having to really worry about that, and equities can then kind of go where they want to go a little bit, right, a little bit more freer range. So let's talk about those equities, right? So S&P, right, the level that I've been talking about all week long. I'll turn on sorry, sometimes I turn these things off. We'll turn on the market profile as well. Right, so all week I've been talking about, and you've probably heard me talk about this if you remember, but the 4208 level, right? Specifically 4,200, 4,200 has been the level that the S&P hasn't been able to really get away from. So we're moving in the right direction, right? We're very close to breaking out at this point. A couple of things that I was a little bit worried about this week was that we weren't able to break out earlier in the week, and we were making a lower, it looked to be like that we were making a lower high. Well, I think you can kind of take away that issue right now, because we're outside of the value area, and we're very close to breaking out. And we're also seeing a lot of breakouts in individual names. So I'll go through some of those names in just a second. But this is good. I mean, this is a good thing, right? And also 4210 was the 1 hour value area too. So we managed to get above that too and hold, right? So we actually got above where we were on Tuesday. By the way, one of the things I talked about this morning was just how tricky this market has been. What do I mean by that? Tricky. Well, the market was a little bit weak on last Friday, going into the close. Obviously, we had off Monday, and then the market makes the whole move for the week going into the day that we're off, right? And as soon as the market opens up on Tuesday, the indices sold off. So that's, to me, is very tricky, right? Because unless you are taking advantage and you're selling everything on Tuesday morning at 9:30, right? You really have to be pretty damn good, in your positioning, right? But this type of thing is difficult, right? And again, it's kind of just funny the way it happens. Like, who bids it up? Who bids the market up? And then only to see it get squashed as soon as the open on Tuesday. So, we'll talk about as I get through this video, just some of the techniques and some of the adjustments that I've been trying to make this week. And again, it's one of those things where you try to plan it out, and sometimes you execute it very well, sometimes you don't execute it very well. Let's move over to the Qs for a minute. So I've talked about this 4,200 level in the S&P for a while, and 4,210, 4,208. In the Qs, the level to watch is this call it 335, right? Top of value is actually 334.51, but I always round up a little bit. But yeah, if we can get above 335, that's kind of, you could look to see how important that level was. That's where basically back on May 7th, that's where this thing got rejected. Then we spent Q spent the end of the week last week, and had difficulty getting over that level at the end of May with the bottom of value. Now again, we talked about this before, but the bottom of value lined up perfectly with the top of value for this new month. So these levels are just about identical. So there hasn't really been much to change in terms of levels that we've needed to adjust to. But yeah, now that we're above here, now maybe we can go and revisit 339 in the Qs. So again, it doesn't necessarily, that's a $4 move. What's that in percentage terms? A $4 move. Yeah, it's like another 1.2%. It's not a big move. So it doesn't mean like I necessarily want to go long the Qs to capture that 1.2% move. But as we do, I trade mainly single stocks. I do trade some ETF, some sector ETFs too, like international ETFs as well. But it just allows more opportunities, right? Even if we do go sideways, we can usually find a good amount of the winners going on in the marketplace, right? So, that's my analysis there. I think IWM, there's not much to really go over except that we know that for the last 2 weeks it's been strong. So you got some digestion going on in IWM. All right. The other thing too that I'll try to tackle some different things here, but I got asked this question earlier on Bloomberg. I was on Bloomberg TV earlier. And it's kind of brings up just an interesting thought. What's going to be the trade? Is it we've heard a lot about the cyclicals. They've made some big moves in 2021. We've heard that growth has kind of taken a bit of a backseat after a big move last year. But hey, if going back to the comment on bonds, if they don't rally, I think that we could continue to see these little market rotations, right? So it could be just a little bit of this and a little bit of that. I know Helene Meisler on Twitter likes to use that phrase as well. But yeah, it could be a couple days of, hey, growth outperforming. Then it's a couple days of value and cyclicals outperforming. Because generally, that's a pretty damn good bull market when that happens. When you've got a lot of rotation like that, and meanwhile, the indices grind higher. I think it's pretty good. Now, again, I had this question earlier too. When you look at the indices, right, and you see low volume, you actually, I know this is very contrary, and I go over this in a lot of these videos, but you actually want to see low volume in the indices. And if you don't believe me, take a look at any of the rallies that you see on your screen. Do you see the rallies on high volume or on low volume? Where do you see the big red bars? The big red bars, the bigger volume, come on the down days. I shouldn't have said big red bars, but just look at the big bars in terms of volume, right? Those happen on the down days. The green days, you want low volume, right? People seem to get scared by that. They're like, oh, geez, well, I'm not convinced by this market because it's low volume. Well, take a look. One of the biggest performances so far of this year, right? Going back to what we saw in April, look at the volume. You don't want big volume. So I know it's one of the biggest misconceptions, right? I know that people like to see volume in a single stock when it breaks out. But in the indices, you do not want big volume. So I hear it literally like once a week. Oh, well, geez, this market doesn't make me comfortable. It's a low volume move, right? Take a look at this move, right? When we saw one of the biggest rips, right? One of the biggest moves. Where's the big volume? So guys, please, all you have to do is look at an S&P chart or a Q's chart over the last 5 years and take a look at any of the major swings higher that we've had. I can pretty much guarantee you none of them have happened on higher than normal volumes. They happen on low volume. Okay. By the way, if you ever have any questions, you could either respond in the email, on the YouTube video, or you can email me, or you can just reach me through the through Twitter as well. All right, so that's my thought on the indices and the rotation that we're seeing. Right, so I'll give you another example. One of the strongest areas this week was energy. Right? But you have to be careful with this stuff too, because energy had a good couple of days, but it's most likely going to consolidate a little bit, right? And then you're going to see some other areas of the market outperform a little bit, right? That's just how it's been working. So if we go back to this week's today's performance, so there's a couple areas that kind of get me a little bit more excited, like I was kind of coming into the week before we had all the short squeeze manias going on. But I still kind of have that view that I think that the easiest, what I'm seeing in terms of sectors, as well as what we went over in the indices and in bonds, tell me that this market might want to go a bit higher. How much? Well, that's debatable, right? And I think because of that, and because we do have a Fed meeting in a couple weeks, you still have to be a pretty damn disciplined trader right now in this market, right? So a couple of things that I like: the semiconductors, right? We talked a lot about them. Speaking of a group that saw really nice strength about a week ago, and then they kind of stalled out this week, right? But as we got to the end of the week, the stronger names, I mean, look at NVIDIA, right? I mean, that's bullish, right? One of the biggest semiconductors, right? And not a cheap name in terms of valuation, breaking out. I mean, that's leadership, right? And if you look at some of the other names too, ASML, right? A Lam Research, these things look like they're trying to break higher to me. Lam Research, Applied Materials. Also, these are names that we're going to be watching next week. You got a nice little pattern here. It looks like a false breakdown here, and possibly going to continue to kind of grind higher. So I think this is a very healthy looking group. What's the other one? Not thinking ADM, but anyway, if it comes back to me, sometimes at the end of the week I draw a little bit of a blank, but I think that's pretty good. And I know that if we look at tech, right, tech had a strong day today. That's very close. I mean, that's a pretty good look too. Kind of looks similar to the Qs, obviously, but take a look at some of these other groups, right? I keep showing this ETF every couple of weeks. This is tech with dividends. It's breaking out. So again, it may not be the super high growth areas of the market, but man, there's some. Look at Oracle today, right? When I was on Bloomberg, I talked a little bit about Cisco. Cisco's moving higher, right? This is the old, what I refer to as old school tech. IBM, which was a trade that I put on earlier in the week and kind of added to it a little bit yesterday after I took a target on Wednesday. It was down on the low of the day, and I bought back my target, but that looks pretty good to me too, right? So again, it's not. I know it's not. What people want to see. A lot of traders fixated on growth. They want to see like your Unity software move, which again, it's starting to look a little bit better, but these are challenging trades. They're challenging because every step of the way they're going to hit overhead supply. So some of these things probably will take some more time to straighten out. I put on a little bit of a trade for next week. Any of this stuff that I end up playing that I give a try to in super high growth is a small trade for me. I put on some next week's calls. I actually turned it into a call spread, but I think it's worth a shot to have, basically to take a couple small shots on some of these things. But are these the best looking areas right now? In terms of like if you're a trend trader? No. And I think that gets lost sometimes, right? So for example, people see a name down and they're like, oh, it's a buying opportunity. But you have to realize every step of the way that this thing goes higher, it's going to be possibly met with people who are trapped above here and are looking to sell into strength. So it is much cleaner when you look at it in an NVIDIA, right? That is now just has new buyers showing up, right? And doesn't have any sellers from higher levels. Look at what Crowd did today, right? Not the best move, down 4% today, down to 206. So this name is struggling, but I'll tell you what, it's not all cyber. Look at what Fortinet's doing, right? This is a name that I have a call spread on. I've taken a couple targets on, and I've got the remaining piece on for June expiration. And look at this thing. It just keeps getting back to new highs. So there is some strength there, and that's just to kind of plug what we do a little bit. We try to really kind of go after the names that are doing this rather than the names that are really tough right now. And I love this name, right? And that's another point. So I'm really going off on some tangents in this video, but there's a difference between, hey, I like this company versus, you could like a company, you could be a fan of a company, use the company, use its services. It doesn't mean you have to be an investor in the company, right? You could use your trading system, your technicals to figure that out if you want to be an investor in a company. But it may be the greatest company in the world, but that doesn't mean the stock price is going to go higher just because it's the best company, right? There's a lot of other factors at play, right? It's not that straightforward, in my opinion, right? In my career over time, right? Look at Amazon. Amazon dominates most industries. Do you think that this is a good chart? It's a mess. It is a sideways mess. Do I use Amazon? Absolutely. I'm a Prime subscriber. I use their delivery services. I use a whole bunch of their services. I order things from their website. So I love it. I use it. Great company. Do I think it's a great place to go long the stock? No. Right? Do you see the difference? And I think so many traders have gotten lost in this, right? Well, I know I like this company. It makes electronic vehicles. Well, do you know how hard it is to make cars, right? And all the things that go into, like, the cost and the production, right? These are complicated businesses, right? So everybody looks at the end product, right? That was that issue with Nikola, right? Drew a beautiful picture of a car, but it's a picture, So I try to it's one of the things I try to help with traders that have been struggling over the last few months is to kind of separate whether you like a company versus whether or not the stock price is going to go up, right? But I think Amazon is a great is a great example of that. Now, this is a name that I'll continue to monitor, and I'll wait for the setup. But there's no setup here. All I see is sideways. Now, if you have a 20-year time horizon, this might straighten itself out and go higher. When it does, who knows, right? And that's why we monitor and we look for the trading opportunities once they occur, right? Once they kind of get, once they provide a good trading signal, right? But right now, I don't see one, and I haven't seen one, for a while in this. And the last time it tried to break out, right? This was a worthy shot, but it failed here. Right? So eventually it's going to have another attempt with that, but right now it's just not there. All right, so this video is already 26 minutes long, but just to kind of if there's anything else that I wanted to mention. Another group of stocks that I find interesting is the defense groups. If you go through the defense names, so not like defensive consumer staples, but the actual aerospace and defense names. Take a look at Lockheed Martin. Right, up very nicely today, up 1.7% for the day, right? That's a signal, right? Consolidation and a break above a really thin value area. That's a signal to me. Also, look at the weekly area, right? You got a level to trade against, right? So again, it's an idea, and where is this idea going to go wrong? Well, if it breaks back below 390, right, then it's back in the range. Keep it simple. Keep it emotion free, right? Another interesting one is this NOC, Northrop Grumman. Look at this thing try to break out. I really like the three kind of inside weeks. Well, they're not really inside weeks, but consolidation. 3 red bars and a beautiful looking green bar. That's awesome looking to me. All right, all this consolidation and bang, a move higher, and I think this one goes higher. I did not put these trades on. This will be kind of setups for, for next week. But interesting. All right. Finally, I'll give you the week's performance. How did we finish for the week? SPY had another green week. Again, it was a little bit rocky in there, but it finished higher, up 1%. Diamonds finished up 1%. Small caps, fine, up 80 basis points. And the same thing for the Qs. So everything kind of stayed 1% and under for the major indices. Emerging markets were a different story. They had a big move in the beginning of the week. They were up 2.7%. We saw some EEM buying, which I participated in a little bit. Gold was the only thing that was down a touch. We mentioned bonds also just under 1% for the week. Growth outperformed value for the week. And again, big story this week was, what happened in the energy names. Also, the REITs got some really nice performance as well. Steel names were back at it. That was mostly in the beginning of the week, although they came alive a little bit at the end of the week. The semis, which we've already covered, telecom names like, look at the T-Mobile. I just tweeted this one out, but there's another stock. I have to wait for Thinkorswim there for a second, but yeah, another stock making new highs. So again, it's, to me, when you see telecom, semiconductors, tech, albeit high dividend names and old school, a little bit more old school tech breaking out, I mean, I think that's enough to be kind of bullish, right? About what's going on. The financials were a little bit off today, but they were still up on the day. They just underperformed. That move in bonds is not going to help financials, but yeah, I mean, I think there's enough things going on right now, and I think the bottom line is, you have to kind of not stay perma anything. If this market decides to change, and if some of the things that I've been talking about in this video happen to reverse and go the other way, then you make adjustments, right? And I think that's what this market is all about right now, is not staying perma anything and being a trader in this market, right? Taking targets as things rip higher, and watching for these rotations and knowing for when the next group of stocks is going to participate. And the last thing I'll say is that's the beauty of being a retail investor. I see so many traders on Twitter and the likes of on message boards that they're fixated on just one or two things, right? Or one or two areas of the market. You could trade whatever is moving. That's the beauty of having the flexibility of being a retail trader. No one is forcing you to do only this type of stock or that type of stock. You could do whatever you want to do. If you want to trade commodities, you could trade commodities, right? It's a beautiful market that we have. All these international areas too, right? There's ETFs to trade those. Brazil was up 9% this week, right? That's something that we talked about over the weekend, right? Really nice move, and was a member of the TTG watchlist trade this week. Was up 9% this week. I mean, really nice look there. All right, guys, so I'll leave it there, but yeah, I think ending the week on a positive note is great. All right, guys, have a great weekend, and I will see you guys back on Monday. If you're a member of Tribeca Trade Group, you'll see the weekend notes from us on Sunday.